virtual event brought to you by RCCG CRA Nottingham, United Kingdom. The program is powered by Voxnet Solutions Limited, and my name is Oidili Ogundanu. Now, before we continue, I'll just invite Pastor Vincent Ibikuli to say a word of prayer, even as we start. Pastor, sir.
Okay, good afternoon, everybody. I want to say thank you again for joining us for this program. This is the fifth in the series, and I want to believe that you have been blessed with the past 4 editions. And I want to guarantee you that today's edition promises to be even more exciting and more illuminating. And I believe that you will be blessed by the time we finish. I want to say thank you to my friend, Kunle, for joining us all the way from Nigeria. Thank you, Kunle, for accepting our invitation. And thank you because I know that you are prepared and the Lord will use you to be a great blessing to us today. We want to say thank you, sir, for being part of this program. Can we quickly pray? Heavenly Father, once again, we want to say thank you for today. This is a day that you have made, and we rejoice and we are glad in it. Almighty God, we commit today's program into your hands. Thank you for your son who has joined us all the way from Nigeria to be a blessing to us and to as many that will be logging on to watch this program, and as many that will be watching even after the program. Lord, we pray that from today, oh Lord, through your son, you open our eyes of understanding to our breakthrough in life. Thank you, Heavenly Father, for in Jesus' mighty name we have prayed. Amen. Thank you once again. God bless you. Have a wonderful time with us.
Amen. Thank you so much, Pastor Vincent Ibikuli. Like I mentioned earlier, today we're going to be looking at our discussion will be centered on investing your money to make you money, creating other streams of income. Now, to help us in providing answers to the pertinent questions related to investing our money and how to use our money, how to invest it, where to invest, I have with me Mr. Kunle Jinadu, MD, Managing Director of First Bank Pensions Custodian. Welcome, Mr. Kunle Jinadu. Welcome, sir.
Thank you very much.
You're welcome, sir. Now, before we continue, the question is, who is Mr. Kunle Jinadu? He possesses, is the first MD, like I mentioned earlier, of First Bank Pensions Custodian. He possesses a Bachelor of Science in Accounting, obtained in 1984. And Mr. Kunle Jinadu qualified as a dealing member of the Nigerian Stock Exchange in 1987 and was subsequently certified accordingly by the Nigerian Stock Exchange in 1988. He is a chartered accountant, fellow of the Institute of Chartered Accountants of Nigeria. He currently operates his own business called Travis Vest Business Advisory and Agricultural Development Company. In the past, he was the Managing Director and CEO of First Pension Custodian Nigeria Limited. Prior to that, he was the Executive Director, Operations and Information Technology. He's also in the past been the Chief Operations Officer of the same organization. He has attended quite a number of courses and workshops and worked in a number of exchange programs in a number of countries, including India, South Africa, United Kingdom, and Ghana. Welcome, Mr. Kunle Jinadu. Can you say a quick hello to our viewers at home before we proceed with today's event, sir?
Yeah, thank you very much.
Yes, sir.
Am I unmuted now?
Yes, sir.
Okay, thank you very much. The intro was good, except that maybe I think that I'm overrated by the delivery. But having said that, let me quickly say that because we don't have a lot of time, I would give us some broad information about investment and how it affects individuals. And then we can go into question and answer session because I noticed that in your past sessions, you allocated such a limited time. And this subject today, you can be in there for the rest of the day. So essentially, what I would say to us is that almost all of us, from time to time, do record net positive assets that if we do not consume, it would not remove anything from us. What do I mean? A lot of the time you have assets, be it cash, be it property, be it anything that you have, that if you did not spend it at a point in time, it will not have reduced anything in terms of your life. What is missing from most people that this subject now comes to as news all the time is because people do not know how to form financial targets. If you have financial targets, the likelihood is that those excess or those surplus that you do record, you would be able to apply them. Now, where do those things, where could they come from? All of us have something we engage in. Some are fortunate that they derive them from inheritance. In the secular world, we hear that people win lotteries. We talk about people running their private businesses. Some people already have acquired real estate property that they earn income from rents and other trades and even pensions. Now, when you have all these things and haven't met all your basic needs and all the obligations that you have around you, the surplus should actually be confined into some sort of financial targets to provide for your needs in the future. Now, why must you do that? First of all, everybody wants some level of growth in life as you move on. So some people invest for the sake of just let me grow from where I am and then be able to meet whatever I need to do in the future. Some save specifically towards their retirement in addition to whatever pension that they may be entitled to at retirement. Some just to earn a higher returns, meaning that they probably have some investment somewhere and based on some advisory, they saw that they could make more money in any other place, then they move on to that. Because what? They are being driven by specific financial targets for themselves. And some, especially for those of us in African countries, because of the exemption of pension from taxes, we do voluntary contributions into our pensions as a way of investing, such that the tax impact on me today will be reduced. And for as long as I'm in the pension, I will never pay taxes on those investments, even by the time I'm catching out. It is also possible that you want to start a new business and you have your target, most especially for those in gainful employment. In 3 years' time, in 5 years' time, I want to be on my own. And so you have a target that you are saving towards so that you can then achieve your long-term goal of financial independence. So those are the reasons why people invest. Now, what sort of things do people invest in? There's so many things that people invest in, ranging from housing to equities to cash investments that we call bank deposits, exchange traded funds, all manners of mutual funds. A number of these things are to help people who do not have a lot of understanding about these investments. So at this meeting, I will not be coming across as if I'm advising on specific investment people to make, because I know that in the UK there you have to be certified in a particular form before you can act in that capacity. So we're talking generally. So you have bank deposits, you have annuities, you have all sorts of investment counters that are possible for you. Now, whether those investments are profitable, I can say to you certainly that most investments are profitable, provided that they have been properly analyzed before you go into them. most investments are set up to return very well for the investors. It is up to the investor to select properly by seeking appropriate advice or follow Financial Times, where you get a lot of information about what is going on around the investment industry. Now, the last item I will bring up is, having said that, does it mean that every investment is good for everybody? The answer will be no. Every investment is good. Everybody can invest in the same instrument. All of us can invest in the same instrument, but that does not make it fit for every person. One size does not necessarily fit all. Individuals have their unique goals. Individuals have time horizons. I'm defining goals, I'm defining age, and I'm defining where you are in the cycle of your birth and where you are towards retirement or towards the grave. So, time horizon for individuals, and then you have income expectations, even at the different stage you have, whether it's of age or work and things like that. So, the opportunities will be defined for the individuals. I can just give you a quick one. Whilst it may be very prudent for a young man who just graduated from school to invest in equities that are referred to as growth stocks, because what? Those stocks are not meant for today. They will grow in 20 years' time. They will become very big in their multiples. But a man who is 60 or 70 years old, does he need that kind of investment? The answer will be very unlikely, unless the person is just one of those who are investing for the sake of their future children and grandchildren. But if it is somebody who is looking for how to survive between now and when he goes to the grave, then you do not need that kind of investment. Everybody have their time horizon, income expectation, and then the cash flows for individuals and liabilities, they vary. While some still need money at the turn of every quarter, at the turn of 6 months, at the turn of this, to meet certain obligations, including school fees and stuff, some do not have those needs. So that will determine the kind of expectations in terms of flow of cash back on your investments. Different people will have different targets in that regard. There are no two people, even if you are the same age, that have the same targets in terms of time horizon and in terms of changing needs. You know, as we also grow, things are going to change for the individuals that will require adjustments. It doesn't matter whether you're of the same age or whether you're both young, but as you grow, things are going to change differently for different people, you know, that will make you to do adjustments to your investments and strategies as you go on. I believe that captures the overall reasons for people investing and what people should invest in. That I don't sound as having advised you on what to invest in.
Thank you so much, sir. Thank you so much for that brief introduction. Very brilliant. And just for the sake of emphasis, I would just ask some questions around some of the things you've discussed, and so that our viewers can also have deeper understanding. Now, the question, like you did identify, is that there are many types of investments that individuals can consider. And you did mention that those investments, you know, could also depend on, you know, the stage they are in their current life cycle. So the question is, let's start with what are the different forms of investments that you think is available to individuals? What are those types of investments that individuals can consider?
Okay, in my submission, I actually did mention that depending on the individual and capacity, you have somebody who has some resources to invest in real estate, either for growth because you are able to commit those funds into future. So you're expecting growth. For some people, the return from that investment in terms of rent is sufficient for the person to continue in life until the asset also accumulates growth and then cash out at some point. The other investment will be equities. Equities gives you both that growth in terms of price and then dividends. Now, what am I looking for? Some people are looking for the growth in those assets, whether it comes dividends today or not. Some actually rely on the dividends that come from those investments for their day-to-day run. That's some people. Some people don't want to tie themselves into the issue of growth or anything. They just simply want assets that have a cash flow. And that takes us to bank deposits. Bank deposits can come in various forms. You either go in yourself because you know the bank that you trust or somebody has provided you with the advice as to where to go, or you look at specialized institutions that help people to manage their resources. Some of those funds are the ones we call the mutual funds. The mutual funds actually assist people to diversify their risks in terms of, because many people bring their funds into it and then they are able to spread it across different investment counters. Now, even within that, the mutual funds would ask you, do you want a money market based investment, meaning that they are putting your money in bank deposits, commercial papers, treasury bills, everything that is very, very liquid in terms of recovery. Or they say, do you want fixed income, meaning that they are putting your investments in bonds issued by governments, states, and local governments, and possibly even corporates. They're putting your money in those things. So that helps people who do not have the knowledge of what to do. There are some exotic investments that even me as a sit-here do not have all the answers to. So I wouldn't say that that's an advice for anybody on this forum at this time. And those ones are like the cryptocurrency. Cryptocurrency, people have made money and people have lost money. So it's now a function of how much risk you are willing to take. But if I exotic, those are not readily available investment options for people. So essentially, those are investment possibilities. And another one is, okay, you like currency. You want to move money between currencies. I know people who at some point in time moved money out of, let's say, from Nigeria and put it in US dollars, and then at some point bring it back, just like the situation we have today. I mean, Nigerian naira is almost hitting 500 naira. If somebody had bought US dollars at 360 a few months ago, and you're repatriating it today, you have made a kill. So all of these things are possible. It's a function of how much knowledge you have, because all of these things can also go the other way. How much knowledge you have, how much advice you are taking, that would enable you to fix all these things. That's it.
Oh, thank you so much, sir. So you've emphasized that it's also important that we take into consideration the amount of money that we possess, the amount of risk we are willing to take. But another thing, in this, with the level of the current situation, level of uncertainty going around the world now with the COVID-19 pandemic, there's a lot of uncertainty in the air. A lot of postulation of likely economic recessions and things like that. Do you think that it's a time for people to consider investing? Do you think this is the right time? I mean, that people should think of investing? And what kind of investment is likely to have a low risk in this period of uncertainty?
Okay. Let me state first of all that COVID-19 is a very destructive plague. Very destructive. It's disrupted our lives, it's disrupted our activities, disrupted so many things about the human endeavor. But having said that, in a typical recession, it is usually, this time is usually the opportune time for people to quickly go in. Because what you find is that there is a depreciation in the value of so many investments, and you use the opportunity to enter at low, and then with a view that when the recession goes out, you're making a lot of kill out of it. But this season has not particularly brought that. And I think what I would say has accounted for it mainly is the noise by the major economies that has also forced lesser economies to begin to think that they may have to bail out most industries. And so for that reason, you can take a classic check. The securities market has not come down as anybody would have thought. Even when the underlying manufacturing companies and the rest have shut down production, but their values have not come down. Because what? Because they're relying on the fact that there will be some kind of bailout, and there is not so much panic. Even those of us who are investors in the different markets, we have not panicked to the point that we will quickly be dropping those assets and then crash their values. So, having said that, I will say that prices having stagnated now, for a young investor or any investor at any level, it may still be the best time to go in. Because what? The government institutions are being at this stage now. By the time we come back, the likelihood is that values are going to ramp up because of what? Scarcity are going to be there. Opportunities, the rush for recovery, exports to nations around the world. So I think are going to be so much that we're likely going to see a bump in the value of securities in the markets. That's the way I say it.
Okay, so because another question, what I'm also thinking of is looking at all this postulation. I mean, people can also be afraid. I mean, take into consideration that with that level of uncertainty, that some people will be thinking that, okay, the money I've got in my account, I want to keep it and make sure I'm able to continue to feed on. But with the likelihood that some people are even afraid they may lose their job, So are there any particular investments, like you already mentioned some of them already, but are there any specific investments, in your own opinion, that you think, will fit into that position that in the next 1 year or something, or by the time this COVID-19 is gone out of the way, they are likely to bring huge returns that you think are likely to bounce back?
What I can say in a situation where people are not very sure of anything, what you find is that people first of all fly to safety. Somebody who is suspecting that he may lose his job is not going to be adventurous with investment. So rather first move to a safe place. Now, where are these safe places? Even when the kind of returns are low, but you are sure that you will be covered. Number one place is any form of government instruments, particularly the short term. The reason we run to government instruments is the fact that the government is always a continuum. It's unlikely, barring anything that wipe up this entire world. Which means even if you the investor, you are not going to be left behind. Government will always meet its obligation. So that one is assured. The other one is based on proper evaluation of the institution. There are institutions you can invest in, not necessarily equities, maybe the papers, certificate of deposits that guarantees your return, and then the capital. With the banks, yes, we will be safe until, this COVID-19 unfolds, and then we know where we are. Then people can go. But I say to you that those who have confidence and courage are actually moving investments into some other areas that I don't know about people who live in the first world like you guys. But in Africa, for example, people are becoming bolder to move investments from cash position into the likes of agriculture. Into the likes of agriculture, producing food, because what? This is something that is unlikely to ever fail. More and more people are moving into that arena. And I think more and more, it is what you are able to do for yourself. So if you are not doing agriculture, what else can you do? What expertise do you have? What service can you sell that you need to invest in yourself, to go after? Because it is in this period that you have a chance. I've been on lockdown now for 4 months. For 4 months. It is within that 4 months that I took retirement and I'm back into agriculture. It's an opportunity for people to reflect entirely and plan post-COVID.
Thank you so much, sir. Thank you so much, sir. Now, for those who are viewing, listening to the program at home, just want to remind you that if you have any questions, please, you will see on your screen the information to be able to post those questions via Slido. Please do that even as the program continues. Now, back to you, Mr. Kunle Lawasa. Can I ask very quickly, take into consideration that you did mention that before anyone can consider or think of investment, before we can consider investing or consider investing an investment, that we definitely need money, we need confidence. But the question is, take into consideration that some people are likely, to have challenges with getting the initial capital. Can I ask, is there any way, that one can invest without requiring large sum of money, large sum of capital? And are there opportunities? Would you advise someone to borrow money to invest? Do you think that's a viable opportunity? And how can people source for initial capital to be able to, start an investment? Hello, sir. Can you hear me? Oh, we can't hear you, sir. I think we're having... Hello? Okay, go ahead, sir. Sorry about that. Go ahead, sir. Sorry about that.
Can you hear me now?
Oh, yes, sir. We can hear you now, sir. Thank you so much, sir.
The microphone was muted.
Oh, sorry about that. We apologize. So I'll rephrase that question again. So the question again is for those who, like you mentioned, that some people might, we definitely need capital, large sum of money, particularly to invest. But the question is, how do people raise that initial investment to be able to, invest in a particular investment? I mean, how do you think they could raise it? Take into consideration the size of the investment.
Well, little drops of water makes the ocean. Depending on at what stage in life the person is, if you set a financial target for yourself, even if it is £100, you are setting aside on a monthly basis or on a weekly basis, over what time horizon it will accumulate to something. You do not wake up today and want to invest like a big boy who has been through life for 30-something years. So you take it stage by stage. Investment is not about competition. It's about who you are, and you start your own at your own pace and migrate it to where you want to be. Reviewing your targets as you go along. Now, there is no amount of money that is too small to invest. It's just that's the function of what investments you want to do. There are so many investments that allow you to start and then drop incrementally as you grow in life. I mean, imagine some of the investments you do we do for our children. From the point of birth, you create an account for the child. And you know that the account is an interest-bearing account. Every month you decided, you put money into that account. So that by the time the child is 17, the money in the account has accumulated to pay for the child's uni. That's a financial target. So you must start from somewhere and grow yourself deliberately towards what you want. That's how to make investments. It's not about because somebody is doing, you are not prepared for it. You can't be like that person. What you are saying.
Oh, I think we lost. Oh, yes, sir.
It was.
Good to
okay.
About that. Yes, sir.
So that is what it is. Then on the question of borrowing to invest.
Thank you, sir.
Speculators do that. Do you want to be a speculator? We have seen people who borrowed money to invest in certain equities. We have seen people who borrowed money to invest in foreign exchange because they know quite well that something would happen, and by the time they return, they will be able to do that. And people have made fortune from that. But then, to do that borrowing, how much must you have done in life for that lender to believe you or to lend it to you? So everybody will build their time and strategy and growth and education. You build it up to that point that you could wake up tomorrow and say a bank in Nigeria will lend you money, you use that money to buy foreign exchange, move it to the UK, and in 6 months' time you bring the money back and it's doubled. In terms of naira, you pay back the institution and you're cool. All of that are possible, but I can say to you that it is not necessarily available to everybody. If it comes to what governments around the world are doing about assisting citizens to grow, there are a lot of money being lent now out of this Reserve Bank, Central Bank, just to encourage small business owners. Small business owners to invest in their distance. Somebody can capitalize on that. I have had back home here, I don't live in the UK, I have had back home here where government is saying, come and take money, invest in your agri project or something at 0 interest. At 0 interest. All of these are possibilities that you have to position and be sure exactly what you want to do and how much risk you are taking. Should it not work exactly the way That's the danger with borrowing money to finance investments.
So I think you're saying, therefore, that we must be very careful. I mean, in terms of borrowing to finance an investment. And if I pick from your point, I think you also suggested that, you know, saving before investing, you know, that it's not the time you thought of an investment that you go into that investment, that you should save. Is that what you're saying? Before you then think of investing. You should save first of all before doing that. Is that what you're saying, sir?
Now, let's call it this way. Your savings is an investment in itself. So you are just simply growing capital.
Yes.
You're growing capital. So now when you grow your capital by way of savings up to a point, then you are able to aspire to do bigger things. You know, if you have £100 and you put it in the equity of a company that £100 will mean, let's say, 100 units of shares for simplicity's sake. And then in the end, you know, at the end of 1 year, the company is paying you 1 cent or 1 pence by the end of the year by unit. So what it means that you are getting 10 cents or 10 pence from that investment. Now, that may not be the kind of investment you're looking for. You know that to make a lot of money in that area, you have to do it fairly big. So you're building a stream in case something happens. You have other sources that are feeding into your overall financial structure. That's what it is. So, whichever way, you have to start from somewhere. You have an employment, make up your mind how much you are setting aside after having met all your other obligations. Then you move.
Okay, thank you so much, sir. Someone has just asked a question. One of our people who were watching online, someone just asked, and they're asking that there's been an increase in financial investment opportunities. You know, I'm sure as you are aware of some of them in recent times. The question is, how does one distinguish between a legal and illegal investment?
Oh.
Yes, sir.
Okay. Liquid investments are investments that you can call back at any time. It is not only about how much returns it gives you, it's about you also having access to the capital amount. Those are liquid investments. That is where the likes of fixed deposits with the bank, treasury bills, and all those things come in. Compared to if you invested in a bond, bonds are usually of a long-term nature. Some of them as long as 35 years. And by their nature also, should you also decide you want to exit, the market is not readily available. It doesn't happen same day, it doesn't happen, you know. Even if you want to pay, you have got to pay penalties. They are not readily available. You can get them out ultimately, but it won't happen the day you want it. Just like when you invest in real estate. You're not going to say, I want money today, and the house will be sold that same day. Unless imagine it happens, and then you just be lucky. So essentially, liquid investment are investments that returns money to you and you have access to the capital anytime you want it.
No, I'm not even talking of liquid investment now, sir. I'm talking of legal. So legal and illegal. So legal and illegal investment opportunities.
Oh, okay, okay.
Yes, sir.
Well, I would say that you want to be legal is to deal with the appropriate institutions. Illegal would mean dealing with some guys that you're not sure they have identity, you're not sure they have address. I don't see how that would affect any one of us here, because I'm not going to deal with somebody who does not have an identity. So the issue of me dealing illegally is not likely to arise at all. I know what you mean people offering you all manners of possibilities, and I would advise that you do not. Anything that you are unable to identify the identity of the institution that you're dealing with, I don't think you should. I don't even want to try to find out whether it is legal or illegal. So long as you are unable to hold an institution, a responsible institution, to your investment, don't do it.
So what are the features, I mean, characteristics of those, because we tend to see them a lot online, you see this one, it could be, they just mention their name, they could ask you, oh, they want to double your finance, you bring the money, and some of them even come with, claiming that they're agricultural, investors, and they will just invest your funds, and in 5 years' time, you get back your money, and some people have come back to complain that they were illegal, or got them in trouble or something. What are those features? What can investors or potential investors do, to vouch the integrity of that investment, before deciding to put their savings into such forms of investment? I mean, are there things we could perform? We could call it due diligence, What are those things they could do to vouch its integrity, sir?
You know what I said earlier? I am not certified by FSA to be able to offer those advice. But my own advice is, for example, maybe I'm a bit too way away from some things that are happening. If an HSBC is backing a product, I will buy it. If any of the financial institutions is backing a product, I'll buy it. But if an individual from nowhere is sending something to me online to double my money, in 6 months, double my money in 1 year, I won't buy it. Because the same way that you do it is the same way that your money will go, and you will not be able to tell anybody what happened to you. But if you are doing due diligence, what you are checking is what is behind this investment. If you can establish the institutions behind the investment, it's an insurance product, it is a banking product, it is name it, then maybe. I am not saying that some of those investments have not benefited people, but I think I've had more of people who suffered in the end than people that benefited. All over the place, I see money doubling programs. Some will say they put in money, 100,000, and then they receive 200,000 within 3 minutes. That's not investment for me. That's not investment. I mean, the person went in 1 hour ago and he got it. If you go in now, very unlikely that you get it. But that's not something that will even make you happy that you did. But if you have a product that is backed by a bank, HSBC, Barclays, all manners of, then I would encourage you to go in, because you know that your money will not disappear.
Thank you so much, sir. Now, realistically,
We
sir,
don't be what you want, but
yes,
your money will not disappear.
Yes, sir, you're right, sir. Thank you so much, sir. Now, the question again, someone's asking is, realistically, how long do you think, and I know you've mentioned it already, that we have all forms of investment, long-term, medium-term, and very short-term, but realistically, how long would you advise an investor, a potential investor, to tie up their money for in order to gain, maximum return? How long would you admonish them to tie their investment for?
Okay. At the point in my brief, I said the time horizon for the individual varies. And I used an example. If young man from the unit today invested in a First Bank, that the price of First Bank is 5 naira 50 kobo, and then you wake up tomorrow, the price of First Bank came down to 3 naira. A young man of 25 years of age will not worry. He has how many years to recover? He will retire at 60. So he has 35 years to recover. By which time the expectation is that First Bank will probably be 1,000 naira or more. But if you are 60 or 70, if you put your money in the bank, in the First Bank equity, and then 2 days after the price went down to 4 naira, you will almost have hypertension. Because what? You are already 70. So the encouragement is not for somebody at that level of age, 70, to go into investments that are that risky and of a long-term nature. Such a person will probably come back home and be looking at investment that will give him something on a monthly basis or on every quarter or 6 monthly, and that he can also reach in emergency. So there are two different things. For many of us living in Africa, don't forget that we provide everything for ourselves. At retirement, in my old age, if anything happens, I still have to look for money to pay my medical. Yes, I know for sure for people in the first world, they probably have access to medicals that people don't have. So those of you out there can probably take a little bit more risk than the man in Nigeria, for example. He can't afford to fall sick and cannot reach his money because the money is not retrievable easily. So in terms of time horizon, you want to ask yourself, am I investing into the longer term because I am 35 years today? I am not desperately looking for anything. I'm ready to set aside this money for 20 years, 25 years, so that by the time I'm approaching 60, my investment should have grown so much. We have seen people who became multi-millionaire by this kind of arrangement. But they started pretty early and they closed their eyes to it. So when advising somebody, you are not advising somebody who thinks that he wants to invest, he may need money tomorrow. No, it must be investment that you can look away from because you are deliberately growing your portfolio. You are deliberately growing your portfolio. You are not just doing it for the sake of it. If you want to do investment that you can go back to be able to buy your groceries tomorrow, then just put it in your savings account.
Thank you so much, sir. Now, someone was just asked again. The person wants to know, and it's 2 questions, but I'll merge them into one. It says, what can help me make an informed decision on investing in stocks in Nigeria? Or maybe you answer that, and then I'll go to the next one, sir. So what can help me to make an informed decision on investing in stocks in Nigeria?
Okay. I think first and foremost, you, just like in the UK there, you have financial advisors that you can talk to. You read Financial Times to read about all this. The same way that one, and I would also insist that for somebody who lives in a place like the UK, you want to look at Nigeria and decide on the financial advisors that you want to listen to. This financial advisor may be a stockbroker. And I will also repeat, you do not need every stockbroker in Nigeria to achieve your targets. You have to do the analysis of which of them that has the reputation. I am not saying this to scare you. I have had cases where people sent money to invest in Nigerian stock exchange through their stockbrokers, and their stockbrokers ended up selling their shares. I will not deal with just any stockbroker. I will find out which stockbrokers have got the reputation and got the resources to keep the integrity of my security. When you listen to those people, you would be able to know what security to deal in. There are institutions selling reports on a daily basis that shows sell or buy and things like that. You can rely on those things also, but even when you rely on those reports, you must not rely on just any stockbroker. Rely on a quality stockbroker. That's great.
Thank you so much, sir. And someone wants to know again that who is the right person, and I know you've mentioned it already, maybe for the sake of emphasis, that who is the right person to consult if, so this person is not talking of stocks now, but who is the right person to consult if I want to invest in Nigeria?
If you want to invest in Nigeria?
Yes, sir.
Because we are talking about small investors, it may just be good to look through the list of institutions in Nigeria that are doing this business. Once you check them and you check the people behind them, then you can make your decisions. The alternative, assuming you are able to also buy the services of experts out of the UK, is you have some financial institutions who are also trading across borders. So they take responsibility for investing through stockbrokers in Nigeria and keeping it with custodians without necessarily disclosing the names of the investors. But this may come at an extra cost. Which the reason why many of us will not patronize them and rather go straight to the stockbrokers locally to achieve what we want to achieve. But the truth of the matter is that there are quite a number of stockbrokers. I'm not marketing for anybody, but there are quite a number of stockbrokers that are of high quality that you can talk to and you'll be safe.
Okay, thank you so much, sir. Just one last question, which aligns with the previous question I asked earlier regarding investing in Nigeria. Now, for those who are interested in investing in Nigeria and living far away, staying in the developed country and sending money for investment in Nigeria, are there any advice? Because from your discussion I could learn that it's also important that we monitor those investments, to monitor them and to ensure that the investor, maybe we have an investor manager or something, they are not playing with investment. Are there any advice you would give to such kind of investor now to manage their investment in Nigeria? And because you are not there anyway, so you don't know if your investment is doing well. Are there any way one can manage such forms of investment, even from a far distance?
No doubt, there are a number of institutions who are into investment management like that. There are quite a number of asset managers, around that are very good with high quality people in them. There are quite a number of them. There is no doubt that we've got them. It's just a question of you getting to have the list of all the operators in that arena in Nigeria. There is one recently that even started the foreign exchange investment program, whereby people can actually invest in hard currency. I'm sure many of you may have heard about Afrinvest. It started out there in London before they established a relationship with another company in Nigeria, and then eventually took over the company in Nigeria. I mean, such a company sells reports on a daily basis of what you can do. They run an asset management program, for people all over the world, who brings in money into the country. Similarly, there are quite a number of them, Chapel Hill, Denham, Greenwich Trust. There are quite a number. There are some that are actually embedded within banks. Stanbic IBTC, for example. You've got the Stanbic IBTC Asset Management. You've got UBA has something like that also. You have SVN Quest. So there are quite a number like that. It's just a question of identifying which one you want to go with. There are also so many bad ones. I don't remember those names because I don't deal with them. But that's what I'll say to you. There are quite a good number of them around that manages as people with very odd experiences are people who have patronized the bad places.
Thank you so much for joining us today, Mr. Kunle Jinadu, on today's virtual program. We've really enjoyed and it's been very insightful. Thank you so much. And thank you for our viewers who have also joined us on watching today's program. It's been awesome having you around. We also want to thank RCCG CRA Nottingham for bringing this program and for Voxnet for powering it. It's been an awesome afternoon, and we have come to the very end of today's program. I want to thank once again, Mr. Kunle Jinadu for joining us. Thank you very much. And we hope that you will join us again next week for the next virtual event. Thank you so much for joining us. Thank you. Thank you so much, sir.